Testing, testing. Let me see if everything is showing all right. Uh, testing, testing. Testing, testing. Yep, the audio is good, and also the screen. It might a little bit lagging, but yeah, it's the internet problem because I'm switching away from the previous office. So yeah, there might be some connection problem there. But no worries. Since the sound is all right, then maybe we wait for a little bit before we get started on today's sections, just to let the others get in. So today we'll be talking about one of the way to utilize options as a weapons to generate a monthly income. Just like how we doing a job, get employed, and this will help us to just generate a very stable monthly income. But beforehand, you need to be aware that this is not a a, a principle friendly skill to do so. 没有开始会议。Can everyone see my screen and also my voice? Is it showing all right? I'm not so sure. Okay. Wait for a bit, yeah. Let me get to make one trade before we get started. It looks like quite a good entry for me. And just now we have the news, if I'm not mistaken. Uh, let's see. Yep. Uh, what do we call a small non-farm? Second, yeah. My internet is very bad. Okay. So let's get started on today's sections. So today we will talk about one of the way to utilize options. So in my opinion, this one is actually better when you comparing to dividends and also rentals and also the bank interest. Like you put it into the bank, FD for example. For I don't know about the other country, but if you put into Malaysia FD, then the rate given might be around 2 to 4%, which I would say generally it be around 2. Meanwhile, if you just go for a dividend play, and then you will be getting about 4 to 6% in average. Okay, so 4 to 6% in average. I would say quite good, but it's not there yet because if you're comparing to the S&P result for the past 10 years, it will be around, you know, uh 9 to 13%, if I'm not mistaken. So 9 to 13% is not a passive income, it's not a dividends, but this is the wealth that you are able to generate if you just leave it there, leave your money there without doing anything. And other than that, how about if you put it into other equity, uh, trading firms that help you to just manage your fund, and how much they can generate will be around, let's say it will be around like uh, if you, for example, crypto for the past years, it's very good years. They're performing very well. So it'll be around 400%. But in January, even Warren Buffett, the annual profit will be around 23 to 26%. Even Warren Buffett, such a great man in the history. So I would say that if you use options to generate this kind of passive income, so it might be somehow about there, but you need to have some skills and some knowledge to do so. Because even if you're comparing to the dividend, it can generate a lot of money if you compare to dividend. But the pro and cons will be you will require it will require you to have some skill and some knowledge. For example, the trade management, the risk management, and so on. Because if you just do it blindly without any solid reasons, then you might be end up losing your shares or your money. So a naked short is very dangerous. So when we are talking about the monthly cash flow generations in options, we are talking about being a seller in options. So previously we have talked about being a buyer in the options, and being a buyer is actually quite good because you can just enjoy the leverage effect, enjoy the flipping, the rocket feeling of flipping your account. So if you just follow us along the way, you'll find out that in the put options that we have been doing, have been flipping my account from 800 something to 5,000 something, near to 6,000. And that is the effects of being a buyer. And buyer, the pro and cons is like this. The winning rate might be smaller because sometimes even though the share price go in your way, but you might end up losing because of the time decay, the time value decays, and the others. Because there's so many value that contribute to the options value. So you need to make sure that the fluctuations will be enough to cover all those depreciation, all those time decay. So other than that, if you are being a seller, that means you won't enjoy the leverage effect, but somehow your winning rate will be a little bit, I would say a lot larger when you're comparing to being a buyer. Why? Because being a buyer, I would say that most of the player in the market are losing money. So now you're becoming an opposite party. Then that means that majority of the time you will be the winner instead. So so without talking much, we will just directly go into the details that being a option seller. Let me switch the language. So we were talking about being option seller and to just generate monthly cash flow. And this is actually one of the favorite skill of Warren Buffett. He used he become an option seller and he used his strategy, which is what we call a wheel strategy instead. What this wheel strategy play is that he keep on doing a sell put and a sell call to replace a very traditional buy and sell in the traditional market. And this helped him to just, as we all know, what Warren Buffett do is actually grow together with the company. So he want the company value to increase. He will hold for a very long time. And actually he's only using options as a support, not as a main. He didn't want to just gamble in the market. He want to have a very long-term investment plan. So this one is actually just a little bit bonus adding to his portfolio when comparing to his main focus, which is what we call a value investing, a fundamental investing. So if you are also a fundamental investor, a value investor, then you might consider to use this also. And we will talk about it very soon. So being a seller in options is very simple. I will not talk about all those complicated theory and whatsoever. So being a put, I would say that sell put, it's actually a buy share. Meanwhile, a sell call is equal to a sell share. Why I'm saying in this way is because that if you are doing a seller for put options, you equivalent to a buyer positions in the traditional stock trading market. Which mean that for example, if I go to, let's say, Nvidia, let's remove every noise. Okay. Okay, so let's say I actually want to buy at the previous support. Okay, which is at this level. And I already missed the previous candle. Right now, I want to just pen an order here, or so-called what we would say buy at the support. So I'm waiting for it to just come down, pick me up, and then continue to go up. In that case, I actually can, instead of just pending a buy order here, a buy limit order here, I can actually sell a put options here. What I mean is that, what is this level? 106. Okay, so let's us go to the interface of UseMart, and we can just check on Nvidia. So usually what we do is that we pen a buy limit order at here. Support at, let's say, 106. Okay. The old way is that we pen a buy limit here. But with options, what you can do is that you can sell a put option here. So what is the difference in between? The difference is that when we are doing a seller, we are actually collecting money. It's very common, right? Just like when we are selling things, we will collect money. When we sell things, like we sell the apples to the others, when we sell fruits, when we sell the chips and whatsoever. When we are selling things, we have to collect money. And actually, these options is a value that we collected at that time. So this one is actually the what we call the option chains for NVIDIA. Okay, so for example, at the support of 106, right? When we talk about selling a put option and the market price will be around, let's see the latest price, 1.01. What it means is that instead of just pending a buy limit here when waiting for it to hit, when it hits, we still need to pay some, some platform fees or whatsoever. Now we can do a sell put. And what is the difference is that when we are selling the put options, at the moment that we click the button, we will collect the premium, which is 1.01 US dollar per share. And one option is actually equivalent to 100 share. That means you are going to collect for $100, or roughly $100 just for the premium itself. So what happened is that when we sell a put options at this level, if it come down and it hit this 106, then I will buy 100 share at 106, just like how we are doing a buy limit order. But the difference is that we collect the premium in advance. So the good thing is that even though it didn't hit, we still have this $100 in our pocket because we already collected it at the moment that we sell the options. So, but you need to be aware of the time, which is the expiration date here. And you can see that the expiration date is at Pro 4, which means there's 2 days until expiration, which means that in these 2 days, if it comes down to hit 106, I will buy NVIDIA 100 share at 106. If it doesn't, then I will just keep this $100 at my pocket and then waiting for it to just keep on going up and up and up. So this is what we call a sell put. There's pro and cons. The pro is that you are able to collect the premium in advance. The con is, what is the cons? The con is you need to have the money to at least buy 100 share, because one option is actually equivalent to 100 share. So if you don't have the money to buy 100 share, then the platform will just what we call flat close your position, force close. In that case, you will end up losing money. And that is what we call a naked short, because you don't have enough money to buy 100 share at the level that you desire. So whenever you try to become a seller in option market, make sure that you have the sufficient funds to support whatever you do. Okay? So the con is that you will need to have the money for at least 100 share. That's why I'm saying that this is not a very a very friendly game for the beginner, because at 106 and 100 share, that is actually quite a lot of money comparing to beginners. So if you are beginners, actually I would suggest you to go for a buyer position instead, because the buyer position is actually trying to flip a small account to a bigger account. But if you are already a big account and you want a steady inflow, a steady wealth generations, then this is what you can do. And you can see that just when you are doing this and you already collected $100 for these only 2 days. So $100 for this amount that you are ready, the amount that you are ready, this is actually far exceeds what we call a 2% to 4% for a year. since you're already going to buy it anyway, and this is what we call an extra bonus for your actions. So what smart investor will do is that they are trying to use the options to replace a traditional buy and sell. And then yeah, this is a rich people game. So you can see that rich people can generate money a lot easier when you're comparing to poor people. Okay, so what happened after 2 days? If it doesn't just drop to 106, then you collect the money and then you didn't buy 100 share. If it dropped to 106, then you'll buy 100 share, and this money you will still keep in your pocket. And what happened after the expiration? You can actually do it over and over again. So you can just look for another one, maybe the next one that's going to expire in another week, or you can look for a longer uh a longer period. Let's say I'm planning to just buy on Nvidia in the following 1 month. Then I can actually just go for this one instead, because this has still have 30 days until expirations. And then you can see that the premium that I collected will be a lot bigger when you're comparing to those that are going to expire soon. So this is the the meters that you need to be adjusted. You want more money, you want more premium, or you want and also the risks. So you need to control among that. So the first one, your risk is 2 days. If it doesn't hit, then you keep the $100 safely just for 2 days. But if this one is your risk exposed is 30 days for a whole month. So but the money that you are going to collect will be 400 because it's $4 per share. So this is what you need to be aware of. And as afterwards, I still need to give you a little bit of what we call risk warning. You can see the volume here. This is actually very important because this represents the liquidity of the options. So when we are trying to trade the options, no matter become a buyer or a seller, make sure that the option that you trade have a sufficient liquidity. Why? It's because to make sure that you enter the position and quit the position without any problems. Because sometimes if you are going to trade those with very limited liquidity, you'll find out one situation where even though you make money, you are unable to exit the positions with profit because nobody is going to take it from you. So this is actually what I experienced before. So make sure that when you are going to just trade this one, make sure the liquidity is sufficient for the option that you choose. And when I'm saying what is the range for sufficient liquidity? I would say above 100. For those options with more than 100 contract trading volume is considered a very good liquidity pool for these options. Okay. And also one little hint for you guys is that actually you can track what we call a delta. Here, using the same example, 106, and you can see the delta here is negative 0.424. 0.2, I would say 0.25. And what does it mean is that 0.25. So it's actually a trend, zero, like this. What we are calling this delta is also equivalent to the possibility of the share price going to be in the market at the time of expiration. So in a human word, in a simple language, which means that when you are going to put a sell put here, the probability that is going to hit you within these 2 days is 24%. So now, what is the probability that you end up didn't buy 100 share and just keep the $100 in your pocket? That will become 75%. That's what I mean that being an option seller is actually having a higher winning percentage, higher winning rate when you're comparing to being a buyer instead. So when you check on the delta, it's actually equal to something like this. And then the 75.1%. If my mathematics do right, what happened is that this actually represent the probability. And this probability is you end up buying 100 share of NVIDIA at 106. And you collect the premium upfront. And this one is equivalent to, and you end up not able to buy anything, but you still collect the 101 in advance. So in any way, this will become the profit that you generate. So if you keep on doing this over and over again, that is what we call a monthly cash flow. So let's see what is the percentage that it represents to you. So in order to do this naked sell put, what you need is actually the money for at least 100 shares, which means your cost your cost is actually 100 share times 106. If I'm doing it correct. Okay. If my math is all right. So what is your profit in 2 days? It's actually 101. So with this, you are able to calculate your profit along the way. A little bit lagging. 101 divided by your cost, which is a 0.9%. 0.9% for 2 days. So if you are going to do this for a year, it will be around 174% per annum. But this is a rough number, what we call a rough number, because the premium that able to just provide to you will be very according to the time value, will be very according to the volatility, what we call the implied volatility, and so on. There's a lot of elements that are going to affect the premium value, but you already can see the power that it brings to you when you're comparing to traditional dividends play or fixed deposit things. Okay. So since that the probability you are going to end up buying is a lot smaller when you're comparing to the second options, which is you end up not able to buy anything and you just keep on collecting the premium. And what happened is that when you keep on doing it over and over again, like if this week is over, then I'm able to do it for next week and keep on doing it until one day I really able to pick up the desired stock at the level that I'm looking for, which is at the support. And this is also good for me because I previously already planned to buy at this level. So make sure that you didn't just get confused of the points, the main focus and also the supportive points. Collecting premium is what your main focus. Your main focus is buy low and sell high in a specific asset. And this one is just an alternative solutions to your traditional buy and sell. But if you want to just switch the focus and just purely to make the profit from the premium, it also can. You just make sure that you select the options have a further strike price. Let's say I'm going to just do a sell put at the strike price of 90. So what is the probability that it fall to 90 in these 2 days? We will see about that. Here you go. You can see the delta is equal to negative 0.011, which means that the probability that it fall to this level, this consolidated area, is 1.1%, and that is already close to none. So in this way, you will have a ridiculous higher winning rate when comparing to what we are picking up here. So your winning rate will be around 1.1% to drop to 90 in 2 days. To stay above 90 in 2 days. So your winning rate will now become 98.9%. But the premium that you are going to collect will be a lot smaller when comparing to what we are doing here. Let's see on what is the amount that we are going to collect. So yeah, 0.06, and the previous close at 0.04, which means that the premium is 0.04. So you are going to just collect for $4 when comparing to the previous one, which is $100. So this is the thing that you need to consider, which is the what is the price that you're going to pick up your stock, and also what is the winning rate of your trade. Okay, so this is what we call a sell put to replace the traditional buy limit. And what you can do afterwards is actually to make another sell call to replace what we call a take profit order. So let's say you already have 100 share on hand and you are going to just exit at this level when you are picking up here, and you want to just sell 100 share of your hands to this on this level on the nearest resistance. Then you can actually sell a call options with a strike price of 120. And meanwhile, you can just exit, you can just sell off 100 share of yourself, and then you're able to collect the premium from selling this call option instead. Let's see what is the premium that you are able to get from this call option selling. Let's say I have 100 share on hand. And in this case, I'm not going to pick up the one that's going to expire in 2 days. Let's say I'm going to pick up the one is going to expire on 1 month. Why is it so far away? So you can see the expiration date of this call option that I'm picking up will be May 2nd. And let's check on Sorry for the lagging. Okay, here we can see. So for this one, 120 is a strike price, which is the nearest resistance that we are going to sell our 100 share of NVIDIA. And then you can see the previous close is around $2.30, which means when we are selling it, we are able to collect 230 at time zero, which is right now. Then afterward, what happened is that if in this 30 day, it climbed up until this 120, this option will help me to sell 100 share of my NVIDIA, and then I can just keep this 200 something in my pocket. If it doesn't, it's just ranging here. Then after 1 month, I can do it over and over again. So no matter you are going to sell a put option or call options, you will get the premium anyhow. It's just that in your current situation, do you have money on hand or do you have the stock on hand? So in any way, we can just keep on collecting this kind of premium and then make it a monthly cash flow instead. So this is all for today. And if you guys have any question, you can just raise up. Else, you can also contact me afterwards. And if you need my personal contact, then wait a second. I'm going to just show it. Wait a second. Here you go. If you are shy, you're introvert, and don't feel comfortable to ask in the public, then you can contact me afterwards. And the below is my personal contact. And this will be my Telegram personal contact, which I will reply more often there. And this one is what you can my business contact, where you can add my WeChat and my WeCom. Meanwhile, if you have any questions outside of trading and investing, then you can just maybe some operations problem, then you can just contact your personal manager. And this is where you can find your personal manager contact. In the apps, you can tap on the Me button and then you'll find the contact there. And if any of you want to just add me, feel free to do so. And this is the Telegram group. And if you have any question there, you can also ask in the group. And thank you all for joining. And I hope you guys can get some money, generate some wealth, and enjoy your holiday for Hari Raya. Thank you.